The story of modern finance did not begin on Wall Street, nor did it start with Silicon Valley or the rise of trillion-dollar technology companies like Apple, Microsoft, or NVIDIA. The true origins of modern capitalism can be traced back more than 400 years, to a time when global trade depended not on satellites or digital networks, but on wooden ships crossing dangerous oceans. During this era, one corporation emerged that would forever change the relationship between business, governments, and wealth. Its name was the Dutch East India Company, better known as the VOC. At its peak, the VOC was unlike anything the world had ever seen. Historians estimate that, adjusted for inflation, its value would exceed $8 trillion in today's money, making it arguably the most valuable company in history. Yet its influence extended far beyond money. The VOC possessed powers that today would seem unimaginable for a private corporation. It could raise its own armies, build forts, wage wars, negotiate treaties with foreign rulers, establish colonies, and even mint its own currency. Imagine a corporation today with the legal authority to command military forces, conduct diplomacy, and print money. It sounds impossible. Yet this was reality in the early 17th century. For nearly 2 centuries, the VOC dominated global trade and became the foundation upon which modern capitalism was built. Investors believed its success would last forever. Dividends continued to flow. Ships returned loaded with valuable spices, and the company's reputation became almost untouchable. To the people of the Dutch Republic, the VOC was more than a business. It was a symbol of national pride, economic strength, and unlimited prosperity. Few imagined that beneath this image of unstoppable success, serious cracks were already beginning to form. Behind the enormous profits lay a system that was becoming increasingly difficult to control. Corruption spread throughout the company's overseas operations, executives struggled to supervise distant colonies, and financial decisions gradually prioritized appearances over reality. Debt slowly replaced genuine profits. Accounting became increasingly opaque, and the company's leadership focused more on maintaining investor confidence than solving the structural problems threatening the empire from within. This is not simply the story of a trading company that eventually failed. It is the blueprint for almost every major corporate crisis that followed. The forces that destroyed the VOC unchecked ambition, weak oversight, excessive debt, financial manipulation, political influence, and the dangerous belief that some institutions are simply too important to fail continue to shape financial markets, even today. If you have ever wondered why financial bubbles keep repeating, why giant corporations suddenly collapse, or why history seems to echo through every modern market crisis, then the answers may have begun in the ports of Amsterdam more than 400 years ago. This is the story of the world's first corporate empire, and how the greatest company on earth became one of history's greatest financial disasters. The birth of the VOC was not simply the creation of another trading company. It was the result of a fierce economic war that was reshaping the world. At the end of the 16th century, spices such as pepper, cloves, cinnamon, and nutmeg were among the most valuable commodities on earth. In Europe, these products were worth fortunes. A single successful voyage to Asia could generate profits of several 100%, attracting merchants willing to risk everything for a chance at extraordinary wealth. At the time, however, the Dutch Republic faced a major problem. Portuguese and Spanish fleets controlled the most profitable sea routes to Asia, while Dutch merchants competed against one another instead of working together. Several small trading companies launched separate expeditions, driving costs higher and reducing profits through internal competition. The Dutch government realized that, if this continued, the Republic would never challenge the maritime empires that dominated global trade. In 1602, an extraordinary decision changed history. The government merged these competing trading companies into a single organization, known as the Verenigd Oostindische Company, or the VOC. But this merger was about far more than efficiency. It created something the world had never seen before: a corporation backed by the power of a nation. The Dutch government granted the VOC a charter unlike anything that had existed before. It gave the company the legal authority to negotiate treaties with foreign rulers, establish colonies, build forts, maintain its own military forces, and wage war whenever necessary to protect its commercial interests. In many parts of Asia, the VOC no longer behaved like a business. It acted as a sovereign government. Financing such an ambitious organization required another revolutionary idea. Instead of raising money for a single voyage and dissolving afterward, the VOC offered permanent ownership to investors. For the first time, in history. Ordinary citizens could purchase shares in a company that would continue operating year after year. Investors no longer had to wait for one expedition to return before risking their money again. They could simply buy shares, receive dividends, and sell those shares to someone else whenever they wished. This innovation laid the foundation for the world's first modern stock market. In Amsterdam, investors began trading VOC shares with one another, creating an active secondary market unlike anything that had existed before. Prices moved according to expectations, rumors, profits, and confidence. In many ways, the financial markets we know today were born on those streets more than 4 centuries ago. The idea was brilliant. Permanent capital allowed the company to build larger fleets, establish permanent trading posts across Asia, and plan decades into the future. Instead of focusing on a single expedition, the VOC quickly became richer, larger, and more influential than any private company before it. But hidden within this revolutionary system was a dangerous weakness that almost no one recognized. Orders sent from Amsterdam could take many months to reach Asia, and reports often required another year to return. By the time directors learned about a problem, it had often grown beyond their control. Distance created opportunity, and opportunity invited corruption. The same innovation that transformed global finance also planted the seeds of one of history's greatest corporate failures. The system that made the VOC powerful would eventually become the very reason for its collapse. As the 17th century progressed, the VOC was no longer simply participating in global trade, it was controlling it. The company's ships crossed thousands of miles of open ocean, connecting Europe with the lucrative markets of Asia. Every successful voyage carried cargo that Europeans considered priceless. Pepper, cloves, cinnamon, nutmeg, silk, tea, porcelain, and countless other luxury goods flowed into Dutch ports, generating enormous wealth for both the company and its investors. At the center of this vast commercial empire stood Batavia, now known as Jakarta. From this headquarters, the VOC coordinated an expanding network of ports, warehouses, forts, and trading posts stretching across the Indian Ocean and Southeast Asia. It wasn't just moving goods, it was controlling the flow of global commerce. In many regions, local rulers had little choice but to negotiate with the company if they wanted access to international markets. To protect this dominance, the VOC built one of the largest private fleets the world had ever seen. Over its lifetime, the company operated thousands of ships and employed hundreds of thousands of sailors, soldiers, merchants, and administrators. No private corporation before or since had exercised such direct control over military and commercial power at the same time. But the VOC didn't simply compete with its rivals. It often eliminated them through military force, political alliances, and exclusive trading agreements. The company secured monopolies over some of the world's most valuable spices. In places like the Banda Islands, where nutmeg grew almost exclusively, the VOC went to extraordinary lengths to maintain complete control over production and exports. Competition was not merely discouraged, it was crushed. These monopolies produced astonishing profits. Some trading voyages generated returns that exceeded several 100%, and shareholders enjoyed dividends that became the envy of Europe. Investing in the VOC was widely seen as one of the safest financial decisions anyone could make. Confidence in the company grew stronger with every passing decade, and its shares became one of the most sought-after investments on the Amsterdam Stock Exchange. Success created an illusion of permanence. As long as ships kept arriving and dividends continued to be paid, few investors questioned how those profits were being generated. It had the support of the Dutch state, unmatched naval power, and an almost unchallenged position in global trade. To many people, the idea that the VOC could ever fail seemed impossible. Yet beneath this extraordinary success, the first warning signs were already beginning to emerge. Running a commercial empire spread across multiple continents was far more expensive than anyone had anticipated. Every fort required soldiers. Every colony demanded administrators. Every sea route had to be protected from pirates and rival European powers. Military campaigns consumed enormous amounts of money, while maintaining distant trading posts required a constant flow of resources from Amsterdam. As the empire expanded, so did its bureaucracy. Decisions that once took weeks now took years. Communication between Europe and Asia was painfully slow, making effective oversight almost impossible. Directors in Amsterdam often had no accurate picture of what was happening thousands of miles away until long after critical decisions had already been made. The very scale that had made the VOC the most powerful corporation in history was quietly becoming its greatest weakness. An empire that seemed invincible from the outside was slowly losing control from within. And where oversight disappears, corruption rarely waits long to follow. For all its military strength and commercial success, the VOC had one problem that no fleet, fortress, or monopoly could solve. It was simply too large to control. What looked like the world's greatest corporation from Amsterdam looked very different in the distant ports of Asia. Thousands of miles separated the company's directors from the people actually running its daily operations. Messages traveled by ship, often taking 6 months or even a year to arrive. By the time information reached the headquarters, the truth was already outdated. This enormous communication gap created the perfect environment for corruption. Local governors, merchants, and senior officials quickly realized that almost no one in Amsterdam could verify what they were doing. They began using the company's ships to transport their own private goods, earning fortunes through personal trading while using company resources. Warehouses were manipulated, inventories disappeared, and contracts with local rulers often included secret payments that never appeared in the official records. Many officials became wealthy not because they served the company, but because they learned how to exploit it. Bribes were disguised as legitimate business expenses, inflated invoices became routine, and losses were hidden behind increasingly complicated accounting records. Every layer of the organization protected the one below it, making honest reporting almost impossible. The larger the company became, the less anyone truly understood what was happening inside it. Modern economists call this the agency problem. The people responsible for managing a company began acting in their own interests instead of the interests of its owners. Today, it is a familiar concept taught in business schools around the world. But the VOC experienced this problem on a scale no one had ever seen before. Shareholders in Amsterdam owned the company, yet they had virtually no way of knowing how their money was being managed on the other side of the world. Even more dangerous was the reaction of the company's leadership. Instead of confronting these growing problems, many directors chose to protect the company's reputation. They understood that investor confidence was the foundation of the VOC's power. If shareholders lost faith, raising new capital would become far more difficult. So, rather than exposing operational failures, they focused on maintaining the appearance of stability. Year after year, dividends continued to be paid, reassuring investors that everything was under control. As long as money kept arriving in shareholders' pockets, few people asked uncomfortable questions. Where were these profits really coming from? Were they generated by successful trade, or were they masking deeper financial problems? Almost nobody wanted to know the answer. The culture of silence became just as dangerous as the corruption itself. Investors trusted the company's reputation instead of examining its financial health. Directors protected confidence instead of transparency. Employees protected their own fortunes instead of the company they were supposed to serve. One by one, the safeguards that should have protected the corporation disappeared. History has shown this pattern many times since. When investors stop questioning, executives stop explaining. When transparency fades, financial manipulation becomes easier. And when success is measured only by rising dividends and a strong share price, reality often becomes the first casualty. By the beginning of the 18th century, the VOC still appeared to be one of the richest organizations on Earth. But beneath the surface, its financial foundations were already beginning to rot. The empire had become addicted to maintaining the illusion of strength, even as its real strength slowly slipped away. For decades, the VOC had managed to preserve the image of an unstoppable empire. From the outside, the ships were still sailing, warehouses remained full, and dividends continued to reach investors. But appearances can be deceiving. Behind the impressive numbers, the company's financial position was deteriorating year after year. Wars against rival European powers consumed enormous resources. Forts had to be repaired, soldiers had to be paid. Ships required constant maintenance, and distant colonies demanded endless financial support. At the same time, competition from the British East India Company grew stronger, reducing the VOC's dominance over Asian trade. Profit margins that had once seemed limitless began to shrink. Instead of adapting to these new realities, the company made a series of disastrous financial decisions. Rather than reducing dividend payments or admitting that profits were falling, the directors chose to protect the company's reputation at almost any cost. In several periods, the VOC continued rewarding shareholders even when its actual financial performance could no longer justify those payments. Borrowing became increasingly common, allowing the company to maintain the appearance of prosperity while its debts quietly accumulated. For investors, nothing seemed wrong. Dividend checks kept arriving, and many assumed the company remained as healthy as ever. But beneath the surface, the numbers were telling a very different story. Debt was replacing genuine earnings, and the company's balance sheet was becoming increasingly difficult to understand. The illusion of stability survived only because confidence survived with it. This is one of the most dangerous moments in the life of any financial institution. When confidence becomes more valuable than transparency, the market stops reflecting reality. Investors no longer evaluate the true condition of a company, they evaluate the image it projects. As long as that image remains intact, problems continue to grow unnoticed. By the second half of the 18th century, reality could no longer be hidden. Trade revenues weakened, operating costs continued to rise, corruption remained deeply rooted throughout the organization, and military expenditures placed even greater pressure on the company's finances. The empire that had once generated extraordinary wealth was now struggling simply to sustain itself. Confidence began to crack. Investors who had believed for generations that the VOC could never fail started asking questions that should have been asked decades earlier. The company's shares lost their appeal. Creditors became increasingly cautious, and public trust slowly turned into uncertainty. What had once been considered the safest investment in Europe was beginning to look like one of its greatest financial risks. The final blow came at the end of the 18th century. After years of mounting debt, declining trade, political instability, and administrative failure, the VOC reached a point where it could no longer survive on its own. In 1799, the Dutch government officially dissolved the company and assumed responsibility for its remaining assets, territories, and, most importantly, its enormous debts. The corporation that had pioneered the modern stock market, introduced permanent shareholder ownership, and built one of history's greatest commercial empires had collapsed under the weight of its own success. Its fall was not caused by a single battle or one catastrophic decision. It was the result of decades of hidden weaknesses, poor governance, excessive debt, weak oversight, and the belief that a company so large and so influential could always find a way to survive. History would prove otherwise. The world's first corporate giant had become one of history's first great corporate failures, leaving behind a lesson that financial markets continue to relearn centuries later. The story of the VOC did not end in 1799. In many ways, it never truly ended. The company disappeared, but the system it created survived. Every time an investor buys a share of a company, every time a corporation raises capital from the public, and every time markets rise or fall based on confidence, the legacy of the VOC is still present. Its greatest achievement was not dominating the spice trade. It was proving that millions of people could place their trust and their money into a single corporation. That idea transformed the global economy forever. It financed industrial revolutions, accelerated technological innovation, and helped build many of the world's most successful businesses. But it also introduced a timeless danger. When confidence becomes blind, it can hide problems that remain invisible until it is too late. History rarely repeats itself in exactly the same way, but it often follows familiar patterns. Excessive optimism, weak corporate governance, rising debt, poor oversight, and the belief that success will continue forever have appeared again and again throughout financial history. From speculative bubbles to corporate scandals and global financial crises, the warning signs have changed very little over the centuries. The lesson of the VOC is not that large corporations are destined to fail. Many grow stronger through innovation, responsible leadership, and disciplined financial management. The real lesson is far more important. Size alone does not create safety. Reputation does not guarantee stability. A rising share price does not always reflect a healthy business. And dividends mean very little if they are built on foundations that cannot last. Every balance sheet tells a story. Every annual report contains clues. Behind every successful company are decisions about risk, transparency, leadership, and accountability. Investors who focus only on headlines often miss what truly matters. The strongest companies are not necessarily those that grow the fastest, but those that remain resilient when conditions become difficult. More than 4 centuries have passed since wooden ships sailed from Amsterdam toward Asia. Today, information travels at the speed of light. Markets operate around the clock, and algorithms execute trades in milliseconds. Technology has transformed finance beyond recognition. Yet human nature has changed very little. Greed still fuels speculation. Fear still drives panic. And confidence still has the power to inflate prices far beyond reality. Perhaps that is why the VOC remains one of the most important stories in financial history. It reminds us that markets are built not only on numbers, but on human behavior. Behind every chart is a decision. Behind every investment is a belief. And behind every financial empire lies a simple question: is its success supported by reality or by confidence alone? The next time you hear about a company reaching another record valuation or dominating an entire industry, Don't ask only how much it is worth. Ask how it creates that value. Ask how it manages risk. Ask whether its growth is sustainable, because the companies that survive 4 generations are rarely the ones that chase unlimited expansion. They are the ones that understand their own limits. The VOC once seemed too powerful to fail. History reached a different conclusion, and perhaps that is the loudest echo in all of finance. Thank you for watching Echoes of Finance. If you enjoyed this journey into the history of capitalism, consider subscribing and joining us for future stories where finance, history, and human nature collide. Because the past is never truly behind us. In the world of money, it is always waiting to repeat itself.